What's the difference between replacement cost value and actual cash value? Hi, Dave Dickinson with Bankers Compliance Consulting. Let me explain some terminology that is used when you're trying to determine the appropriate amount of flood insurance to require that a borrower get. First off, there's the lesser of three rule. We like to say it's your loan balance, it's the insurable value, and then third, the maximum that they can obtain through the National Flood Insurance Program. You pick those three things, you plug them in, and then you determine which is lesser of those three. That's what you have to require for flood insurance. Now, when it comes to insurable value, these two terms, replacement costs and actual cash value, come into play. Replacement cost is to put it back just the way it was. But you can only get replacement costs on dwelling policies. They have to be a single unit. It has to be their primary residence. There's some other factors that go in there. So for most everything else, non-primary dwellings, non-residential, you're going to use a general property policy that pays out actual cash value. What is that? Well, it's the replacement cost less physical depreciation. Now, what is that amount? That's tough to determine. There are companies out there like Marshall Swift that do very extensive appraisals to determine the actual cash value. Let me try to make it simple for you. If you buy a new car, the moment you drive that off the dealership's parking lot, it has depreciated, and if you were to wreck that car, you're going to get a check for less than probably what you paid. Why? You're not getting replacement costs on your car, you're getting physical depreciation, so the actual cash value. If you own your home, you probably have a rider on your homeowner's policy that says we want to make sure that this stays up with inflation. So every year the value of your dwelling goes up. That's to keep up with replacement cost value. So I hope that helps you understand the difference between replacement cost value and actual cash value. There's a lot more to this insurable value topic, but I hope this helps you understand. Thanks for watching.